In the comment sections under every video ever made about this woman, the same sentence appears. Written by strangers who have never met each other, whose families served in different houses and different decades. It comes in minor variations, but always arrives at the same place. My father-in-law stood outside Windsor Castle. My grandfather worked for her household for years. My uncle was a palace guard in the 1970s. And the sentence that follows is always some version of the same thing. She drank like a fish. Not, she enjoyed a tipple. Not, she was fond of champagne. That specific phrase, she drank like a fish, recurs across generations of unconnected oral testimony from people who have no reason to coordinate and no shared source. It's as close to independent corroboration as oral history gets. Every documentary that covers this woman eventually arrives at the gin and Dubonnet. It pauses there, shows you the pastel hat, the little wave, the frail figure on the balcony. It describes the glass before lunch as a charming eccentricity, the nation's grandmother and her tipple, and then it moves on. The drink isn't the story. The drink is the receipt. Somebody had to order it. Somebody had to deliver it. Somebody had to invoice it. And somebody, not her, had to pay for it. That is the part nobody finishes. So let us finish it. February 6, 1952. King George VI is found dead at Sandringham, in his sleep, at 56 years old. His wife, Elizabeth Bowes-Lyon, is 51. Not elderly, not frail, not retreating into quiet widowhood. 51 years old, with potentially 5 decades ahead of her, and she would use almost exactly 5 decades, dying on March 30th, 2002, at 101. She moves from Buckingham Palace to Clarence House, that cream-colored block adjacent to St. James's Palace, built between 1825 and 1827, and now assigned to her as her London residence. She reportedly found it loathsome. She refurbished it anyway, at a cost of around £10,800. Then she settled in for what would become a 49-year stay. Her constitutional position after February 1952 was essentially ceremonial. No state papers to sign, no formal duties she was required to perform, no powers to exercise. Queen Mother was a courtesy title, not an office. She could attend the opening of Parliament or not. She could carry out engagements or not. The Constitution neither required nor prevented anything she chose to do. What she chose to do was maintain a household appropriate to a working head of state, for 50 years after she had ceased to be one. The household she established in those first months of 1952 wasn't built for transition. It was built for permanence. By 2002, when the final accounting became necessary, the staff at Clarence House numbered 50. Total household staff across all her properties reached 83. The Independent reported both figures in the days following her death. Housekeepers, butlers, footmen, pages, chefs, equerries, ladies' maids, ladies-in-waiting, dressers, gardeners, chauffeurs, and a night watchman who sat outside her bedroom door every night. Those staff traveled with her between all 5 residences: Clarence House in London, Royal Lodge at Windsor, Birkhall on the Balmoral estate, the Castle of May in Caithness, and Windsor Castle in Kent. The Guardian, writing the morning after her death, was precise. She maintained a staff of 50 to minister to her every need. At her lodge on the Balmoral estate, flowers were planted to bloom specifically to coincide with her August arrival. A log fire burned in every room, even in summer. In her bedroom at Clarence House, the 2 cherubs on her 4-poster bed had their angels' clothes washed and starched every month. A Fabergé bell summoned service. Footmen stood behind nearly every chair at table. Her ladies-in-waiting, named in a 1985 Spectator profile of her circle, included the Dowager Duchess of Abercorn, the Dowager Viscountess Hambledon, Lady Grimthorpe, Lady Fermoy, Mrs. Patrick Campbell Preston, Lady Angela Oswald, and Lady Elizabeth Bassett. These weren't administrative assistants. These were social attendants, whose function was to be present and available. The role carried no constitutional function whatsoever. A parliamentary annuity funded all of this, a direct charge on the Consolidated Fund, authorized under Section 3 of the Civil List Act 1937 and periodically revised by later legislation. In July 1952, the Hansard debate on the Civil List Bill recorded her provision at £70,000 per year. One MP in the 1971 debate named the figure aloud. £95,000 for the Queen Mother, all tax-free. Mild protest, not formal censure. By 1983, it had reached £321,500, rising to £334,400 in 1984. The Civil List, Increase of Financial Provision Order 1990, raised it to £643,000, effective January 1, 1991. That was the rate for the last 11 years of her life. The 1952 figure was 1/9 of it. Those numbers matter because the 50 years of widowhood can't be flattened into the highest rate. She was 51 when the household was established on the 1952 figure. The expenses preceded the income by decades. The household scale came first. The annuity that might have approached justifying it came last. Running estimates placed annual operating costs for the whole establishment between £1 and £2 million. That figure comes from multiple biographical sources and press analysis. The household accounts were never publicly audited. But the gap between the documented annuity and the documented lifestyle creates its own arithmetic. You don't run 83 staff across 5 properties on the Edwardian model on £643,000 a year. That is where the story begins to require other people's money. Inside Clarence House, the day had a structure. William Tallon, known throughout the household as Backstairs Billy, who had joined royal service at 15 and spent decades at her side, first at Buckingham Palace and then at Clarence House, had his role defined precisely in Tom Quinn's biography. Tallon was the constant provider of her favorite gin and Dubonnet, stage manager of her sometimes ribald lunch parties. He ran the social machinery of the house. At noon, the first drink arrived. Major Colin Burgess, her equerry in the later years, documented the recipe with precision. 2 parts Dubonnet to 1 part gin, served with ice and a slice of lemon. This detail matters because it's routinely reversed in popular retellings. The cocktail was Dubonnet heavy, not gin heavy. The Telegraph's obituary of Tallon recorded how he managed the service. Mysteriously, glasses always remained full. As one lunch guest put it, "No point in putting your hand over the glass. He pours it through the fingers." Red wine came with lunch, often claret, port occasionally to close the meal. At approximately 6 in the evening, what Burgess called the magic hour, she would ask him directly, "Colin, are we at the magic hour?" The answer was 1 or 2 dry martinis. With dinner came pink champagne, specifically Veuve Clicquot, 1 or 2 glasses. That was the sequence, every day, for decades. Burgess himself described her consumption as steady rather than excessive. An equerry in one recorded account characterized her as not an alcoholic exactly, but a devoted drinker. She functioned, by all accounts, with complete competence. She also drank from before lunch until well after dinner, without exception. Journalists who calculated these totals after her death arrived at approximately 70 units of alcohol per week, a figure built from the documented daily sequence divided into estimated pour sizes. That is a reconstruction, not a clinical record. She wasn't clinically dependent on alcohol. The household ran, the guests were entertained, the racing post was read. The press of her lifetime didn't report this in quantitative terms. Fleet Street treatment during her life described a tipple and fondness for champagne. The specific sequences, the noon gin, the magic hour martini, the Veuve Clicquot at dinner, surfaced primarily in memoirs and biographies published after her death. Accounts of royal press management from the same era document how the palace worked. Words in editors' ears, understandings reached in clubs and at lunch. There was no written memo about the Queen Mother's drinking. There didn't need to be. The full architecture of the daily drink service stayed out of print while she was alive because the people who knew it and the people who might have printed it agreed, without writing that agreement down, that it wasn't a story. What broke the silence was death. The lunches were an institution. The Royal Collection Trust records that the Queen Mother greatly enjoyed hosting luncheons and evening receptions at Clarence House. All foreign heads of state called there for tea in the afternoon of the first day of a state visit. The Spectator's 1985 profile named the regulars: Sir Frederick Ashton, Lord Drogheda, Sir Alec Guinness, Sir Fitzroy Maclean, Norman St. John Stevis, Lord Annan, Sir Hugh Casson, Derek Hill, Peter Coates. Female friends included Molly Salisbury, Sybil Chumley, Sally Westminster. Diana Cooper attended what The Spectator called return matches. Former Prime Minister James Callaghan was a frequent guest. The composition, as The Spectator characterized it, ran to 3 parts retainers to 2 parts fresh blood. Difford's Guide, drawing on multiple biographical accounts, described Clarence House lunch parties that routinely ended with guests passed out under the trees after failing to match her heroic consumption. She herself was, it appears, immune. Lady Colin Campbell's disputed 2012 account adds that guests were told it was their duty to keep their spirits up. Campbell's book has attracted legal challenges and public disputes over accuracy, and its specific claims should be weighed accordingly. Every glass on every table had arrived from somewhere. Every case of Veuve Clicquot had a delivery note. Every weekly order placed with whatever wine merchant held the Clarence House account had an invoice attached. The people who held those accounts weren't charmed by the occasion. They were owed money. The horses were where the sustained capital went. Her involvement in steeplechasing began in 1949 with Monaveen, an Irish-bred gelding she owned jointly with Princess Elizabeth, trained by Peter Cazalet at Fairlawn in Kent. Cazalet managed the string until his death in 1973. Fulk Walwyn then took over the yard at Lambourne. Ian Balding and Tim Thompson-Jones also trained for her at various points. Nikki Henderson handled the horses in her later years and described her in terms that made clear the depth of the involvement. After Cheltenham each year, she could brief him on every race. She loved, Henderson said, all the reprobates in racing. More than 400 winners carried her blue and buff racing colors across 53 years of national hunt racing. The Daily Telegraph called her National Hunt Racing's best-known and best-loved supporter. The Cheltenham Festival's Queen Mother Champion Chase is named after her. The defining episode came in March 1956. Devon Loch, a bay gelding, foaled in 1946, trained by Cazalet and ridden by Dick Francis, who would later become one of Britain's most celebrated crime novelists, was running in the Grand National at Aintree. He was leading by several lengths. He was approximately 40 yards from the winning post. Then Devon Loch half-jumped into the air, as though responding to something invisible, and landed flat on his stomach. ESB, the horse directly behind him, walked past and won. The prize Devon Loch had been 40 yards from claiming was £8,000. The cause of the collapse was never conclusively established. Dick Francis's son Felix said decades later, "I've watched it 1,000 times. I just wish he'd win it once." That £8,000 Grand National Prize illustrates the fundamental arithmetic of the operation. Prize money at that level didn't cover annual training costs. For comparable racing operations in later decades, upkeep ran to £17,000 to £25,000 per horse per year. In 1999, when the Sunday Express reported on a proposed plan to address her finances, they cited approximately 10 racehorses in active training. At £20,000 each per year, a conservative benchmark, that is £200,000 in training fees alone, before entry costs, travel, veterinary bills, or jockey fees. No public source has ever totaled her 50-year racing expenditure. The Guardian, writing in March 2002, was plain about it. Her other biggest asset was her stable of racehorses, but they cost more than she ever earned in race winnings. The horses weren't a profitable enterprise. They were an expensive passion, maintained at full scale across 5 decades, inside a household whose parliamentary annuity was already insufficient to cover its baseline running costs. The number that keeps appearing in the reporting is £4 million. It surfaces publicly in the Sunday Express in approximately March 1999. The South China Morning Post relayed the story on March 22nd of that year. The Sunday Express said Prince Charles had devised a plan to pay off an overdraft of £4 million run up by the 98-year-old Queen Mother at the Royal Bank, Coutts, with the sourcing attributed to unidentified royal aides. The reported plan included staff cuts, mothballing one of her 5 homes, selling cars, and reducing the racing stable. None of those things happened. The Guardian ran the £4 million figure again in the days following her death. The March 31st piece described Coutts drawing her attention to the delicate matter of her £4 million overdraft and her refusal to economize or sell any of the art at Clarence House, which held enough porcelain, antique silver, paintings, and 18th-century furniture to stock a museum. The April 3rd piece was more careful. Her overdraft with the royal bankers Coutts, which was reported in 1999 to run to £4 million. That phrasing matters. It does not confirm the figure. It confirms that the figure was reported. Some accounts cite considerably higher numbers. Difford's Guide gives £7 million. Those higher figures circulate in popular retellings, but don't carry the same sourcing trail as the £4 million figure, which traces back to identifiable 1999 press coverage. The range reflects 2 different sources using 2 different numbers, not one source confirming a verified range. The figure should be taken as reported, from identifiable journalism, not as the output of a published audit. Coutts, founded in May 1692 and operating today as the private banking arm of NatWest Group, has never made any public statement about the Queen Mother's account. All the financial detail about her position there comes from press reporting. The account remains sealed within the broader estate settlement. What the overdraft actually represented requires context to understand properly. Her estate at death was estimated at between £50 and £70 million. Art, Fabergé pieces, jewelry, furniture, horses, and the accumulated contents of 5 houses from a century of royal life. She wasn't insolvent. The problem was liquidity. In 1994, she had placed approximately 2/3 of her liquid assets, estimated at £19 million, into trust funds for her great-grandchildren, primarily William and Harry. The Guardian's April 2002 analysis connected this directly to the overdraft. Locking that much capital into trusts probably partly accounted for the Coutts position. She had chosen to gift the capital forward rather than use it to fund ongoing costs, so the ongoing costs were financed by the account instead. A reported overdraft of £4 million against a gross estate of £50 to £70 million represents perhaps 6 to 8% of gross assets. It wasn't a solvency crisis. It was a structural liquidity problem created by a combination of choices: the trusts, the household scale, the racing stable, the refusal to reduce any of it, accumulating into a running negative balance that the parliamentary annuity couldn't absorb. The Guardian attributed to the Queen a remark she reportedly made. Reportedly joked is the paper's own framing, indicating hearsay rather than a recorded statement. That Coots would have folded long ago, but for her mother's overdraft. Whether she said it or not, it captures something accurate about the relationship: a credit arrangement sustained across decades between a private bank and a client whose illiquid assets vastly exceeded her running balance, and whose account was never going to generate a final demand. In one widely circulated account, the Queen Mother herself told a dinner guest at some point, "Golly, I could do with £100,000, couldn't you? Had such an awful afternoon today with my bank manager, scolding me about my overdraft." The precise occasion is unverifiable. What it captures is the tone she brought to it, a complaint delivered with the lightness of someone who found the whole exercise slightly absurd, because the exercise was never going to touch the way she lived. Now to who actually paid. The civil list annuity was a parliamentary charge on the Consolidated Fund, drawn directly from public funds under Section 3 of the Civil List Act 1937, as amended and periodically increased by later acts and orders. Under the Civil List Act 1972, a system of royal trustees was established to review civil list adequacy, comprising the Prime Minister, the Chancellor, and the Keeper of the Privy Purse. Their reports came to Parliament. Only 3 people ever received direct, unreimbursed funding of this kind during Elizabeth II's reign: the Queen herself, the Duke of Edinburgh, and the Queen Mother. Parliamentary annuities for other members of the royal family, Princess Anne, Princess Margaret, the Duke and Duchess of Gloucester, the Duke and Duchess of Kent, Princess Alexandra, were refunded to the Treasury by the Queen from her own private income. The Queen Mother's annuity wasn't refunded. It was a direct, unreimbursed taxpayer charge throughout her widowhood. The Civil List, Increase of Financial Provision Order 1990, made this explicit in statutory text. Section 3 of the Civil List Act 1937, it specified, would be amended to increase the Queen Mother's yearly sum from £334,400 to £643,000. The 1990 order gave the comparative figures: £643,000 to the Queen Mother, set against £359,000 to the Duke of Edinburgh and £219,000 to Princess Margaret. Her annuity was nearly 3 times Princess Margaret's, structurally reflecting the expectation of a substantially larger establishment. Against those annuities, the household cost somewhere between £1 and £2 million annually by best available estimate. The Guardian's piece from March 31, 2002, stated it directly. Her annual £643,000 income from the civil list was barely enough to maintain her household, and the Queen would bail her out to the tune of £1 million or $2 a year. That private subsidy has never been formally documented in any public record. No Treasury paper specifies it. No Royal Trustees report includes it. No Hansard entry names a transfer. What multiple biographical accounts agree on is that it occurred, drawn from the Queen's private income from the Duchy of Lancaster and the Privy Purse, entirely outside any official parliamentary mechanism. William Shawcross, appointed official biographer in 2003, with unrestricted access to the Queen Mother's personal papers in the Royal Archives, noted in his 2009 biography that inevitable financial shortfalls persisted even after the annuity rose to £643,000, and that the Queen covered racing losses and other expenses. The constitutional mechanism was entirely straightforward. The Queen's income from the Duchy of Lancaster is her personal, private money. She can direct it wherever she chooses without parliamentary approval. No formal instrument is required. No Hansard record is produced. The money moved, and no public ledger records the amounts or the timing. The structure, laid out as plainly as the evidence allows, the state provided a parliamentary annuity growing from £70,000 in 1952 to £643,000 by 1991. The household consumed considerably more than that annuity in any given year. The racing stable added a substantial and unquantified further outlay. The Coutts account reportedly bridged the gap that couldn't be covered month to month. Elizabeth II provided, from private income, what the state annuity left short, described in The Guardian as $1 million or $2 million a year, but unconfirmed in any public document. And when she died, the estate passed to the Queen entirely free of inheritance tax under the 1993 agreement with John Major's government, which established that property transferring from the consort of a former monarch to the current monarch is exempt from inheritance tax. The reported Coutts balance and all other outstanding liabilities were absorbed within that estate structure and the trust arrangements. Royal wills are sealed. The specific final accounting isn't public and won't become public. None of this required concealment. It was an arrangement functioning exactly as intended. Public money, private money, deferred credit, and a final estate transfer structured to minimize tax liability. The machinery worked. The people running it had every institutional reason not to publish its details, and the people who had benefited from its running had every personal reason to say nothing either. The supplier question sits at the edge of what the record can tell you. Veuve Clicquot, her specific champagne of choice, documented in Burgess's accounts, supplied a household that served pink champagne with dinner every night. Any business supplying Clarence House continuously over 50 years maintained an ongoing accounts receivable relationship with the household, with invoices outstanding at any given time and payment cycles determined by whatever arrangement the household preferred. Royal warrant holders have historically extended credit to royal households. The warrant itself was a commercial asset, the right to display the royal arms and claim royal patronage, and the implicit arrangement in holding one was that you supplied reliably, invoiced correctly, and waited. Nobody sends a final demand to Clarence House. Whether any specific supplier absorbed losses rather than press a claim against an estate undergoing private settlement, the record does not confirm. The claim that suppliers were left badly exposed after March 2002 exists in oral testimony, a single-source account, unverified, with no corroboration in trade journalism, business memoirs, or contemporary press. It can't be presented as fact. What can be stated plainly is that outstanding accounts payable on March 30, 2002 would have been discharged as part of standard estate administration, one way or another. The people who supplied the gin and the Dubonnet, the red wine and the pink champagne, the kitchen provisions, the flowers that bloomed on schedule at Burke Hall, they were parties to the same economic transaction.
Their invoices are the other side of the ledger the household never balanced from its own resources. Tom Quinn's biography of Talon, drawing on years of direct interviews, captured a quality that never left Elizabeth Bowes Lyon. She spent money, Quinn wrote, as if it were a commodity that reproduced itself. The morning routine at Clarence House was fixed and documented. At 11:45, the first drink. 2 parts Dubonnet, 1 part gin, ice, lemon. Then whatever lunch had been arranged. Then the afternoon. Then the magic hour. Then dinner. Then the Veuve Clicquot. Every day.
across 5 residences, for 50 years. The 1985 Spectator piece captured how deliberately she had assembled the world around her. 3 parts retainers to 2 parts fresh blood, with writers and artists and politicians rotating through alongside the permanent ladies-in-waiting. Sir Alec Guinness attended those lunches. Norman St. John Stevis, later a cabinet minister, was a regular. Lord Annan, the scholar and university administrator. James Callaghan, a former prime minister. She was running a court, with all the infrastructure a court requires, for 5 decades after the role that had historically justified such infrastructure had passed to her daughter. A Fabergé bell summoned the footman. Wine was poured through guests' fingers if they hesitated too long with their hand over the glass. The cherubs were freshly starched. The log fires burned in every room. The flowers were planted to specific bloom schedules. She died on March 30th, 2002, at Royal Lodge, Windsor. She was 101 years old. More than 200,000 people queued in the cold to file past her coffin. They queued for the woman in the pastel hat, the one with the little twist of the wrist, the bright eyes, and the gift that everyone who spent time with her documented, of making you feel, for the duration of your conversation, like the most interesting person she had ever met. That gift was real. The accounts receivable were also real. Somewhere behind that queue was a ledger. Not a scandal, a ledger. Orders placed, deliveries made, invoices filed and refiled and carried forward year after year. Because nobody sends a final demand to Clarence House. A parliamentary annuity, charged on the Consolidated Fund and unreimbursed throughout, growing from £70,000 in 1952 to £643,000 by 1991, still not enough to cover the household it was supposed to fund. Private transfers from a daughter who covered what the state couldn't, drawn from the Duchy of Lancaster and recorded nowhere public. A reported overdraft at Coutts, cited at £4 million in 1999, never confirmed by any document available to anyone outside the estate. Trust funds that locked up £19 million in 1994 and left the running account short of what it needed month to month. An estate of £50 to £70 million transferred to the Queen free of inheritance tax, absorbing everything. The people who queued saw the woman on the balcony. The people who carried the trays saw the order book. She never had to look at it. That was the whole point of being her. The people who carried the trays looked at it every single day.